This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. And as I start Fridays by saying, thank God it's Friday. It's been an eventful week. It's been an action-packed week, like always. We're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, Prashant. Good morning. Morning, Nigel. It is finally Friday, right? But there is definitely a lot of risk aversion in the markets. I mean, you can see it across the global screen. You can see it in our own markets. So it could be a bit of a tough Friday.
Well, that's right. Tough Friday, but it's been an exhausting week as well. So looking forward to the weekend. And Prashant, I told you yesterday, our boys are going to come out on top. And they did very, very well yesterday. But the test is on Sunday because India takes on New Zealand at Dharamshala. The conditions are very, very good for the New Zealand boulders. But as I say yet again, our boys come out on top.
Our boys. No, galat. What is the right way to say it? My boy.
My boys.
My boys. As we were discussing.
My boys come out on top. But we got a test on Sunday.
But by the way, Nigel, I'm just...
venue is supposed to be stunning, right? I've never had a chance to really go to that stadium, but I heard it's one of the most beautiful in the world. So it's also going to be a privilege.
I think one of the highest.
It is the highest
ever. And I think we had our news, the sports editor who had joined us, and he said that is the match to watch out for. That's going to be an important one.
But we have market to watch out for today.
Absolutely. So let's just kick it off. And I mean, the markets are also sending us eventful signals, no less. First of all, just start with where we left off yesterday. The Nifty outperformed the broader market, the global markets that is, but it still ended lower. So there was pressure, right? I mean, through and through, we could not kind of get our head into the green territory. We're down about 0.25% or so, but much better outcome because Asia was down and Europe was down and US futures were lower, and we kind of managed and got away with that one. But overnight, equities are down once again. So the Nasdaq ended almost about 1% lower. The big highlight was always going to be, as we've been highlighting for the last couple of days, Fed Chair Powell's speech, where he basically emphasized in one line, higher for longer, as a theme, that interest rates in the US perhaps will need to be held higher for longer. One thing, with this speech and what he said, without going into details, the November hike is off the table. We won't see a November hike, but the speech does indicate that later meetings in December and so on and so forth are live meetings in which there can be interest rate hikes. But in any case, that was the thrust, that was the message that we got. If you looked at the reaction last night, equities rallied immediately after the Fed Chair Powell's speech, but there was no help from sort of bonds in the US. And I think that is the reason why the rally in equities faded and we never really recovered after that. So the 10-year yield got to about 4.99% last night. I mean, it's kind of frustrating, right? I mean, for headline writers, you could have just said hits 5% since XYZ. But, well, we stopped short of that, 4.99. For all practical purposes, we're there at the 5% level. Oil prices are the other big one, right? They continue to inch higher slowly but steadily. Now we're above the $93 per barrel mark. Just circling all of this back in terms of what it means for the market, the global risk environment is negative. I mean, I think that is the takeaway, that is the handoff. It is not positive. It is not a constructive one this morning. So with that said, hopefully 19,500 levels hold. I mean, this is the level we've been putting out for the last couple of days. The low yesterday was 19,512, and then we saw a decent bounce from that particular point. If that goes, the next big support for the Nifty is at about 19,442, which is the 20-week moving average. That's the big one, a very long, slow-moving average, which is 19,442. Resistance, again, I mean, the upside comes in at two retracement levels, 19,673 and 19,778. So we'll see if we actually, those come into play or not. But again, levels we've put out for a while. This is the retracement of the fall that we've seen from the high to the low. Bank Nifty, that's the weaker of the one. Unlike the Nifty, which has not hit the previous lows, the Bank Nifty actually yesterday hit the August low of 43,600, right? And then it bounced. I mean, the low yesterday was below 43,600, but roughly in that area, we got support and then we bounced. The most optimistic scenario that I can see is that hopefully this is a double bottom for the Bank Nifty, right? And then we see a decent bounce from here. But looking at the risk appetite, etc., doesn't look like that perhaps is the case. First support for the Nifty Bank then is that 43,600 level from where the market bounced about 150, 160 odd points. But after that, for the Nifty Bank, support comes in only at the 200-day moving average, which stands at 43,000, just under 43,200. And that is, again, by the way, not very far away, about a couple of percentage points, and we are there. So, as I said yesterday, you're getting bounces, but it's also very edge of the seat kind of trading environment. So the advice is just to kind of sit out. You don't have to compulsively do something every day. I would go with that view. 110 points lower is what the GIFT Nifty is implying, similar to what we had yesterday. And then, of course, through the course of the day, we saw a bit of a bounce. We'll see if we get that today as well. Sonia.
Oh, absolutely. And it's looking ugly, right? It's not looking good today. I mean, straight off the back, if we're going with a 100-point cut, there's definitely a lot of risk aversion in the market. And let's not forget, this whole geopolitical crisis has far from settled at the moment. Although there is an urgent appeal for a humanitarian ceasefire from people across the world, nothing has happened just yet. There is still plenty of damage both on the humanitarian front as well as on the financial front. And that is having repercussions in global markets. So perhaps, that is another reason why you're seeing this kind of risk aversion. So it is a sell-on rally market today. That's the way to approach it as we kickstart trade. The Bank Nifty has been the one that's leading the decline. So just keep an eye out on that. The Bank Nifty is testing its 200-day moving average. And, it's just at the precipice of that 44,000. It's actually slipped below 44,000. So keep an eye out on that. And if you look at all the parameters that we've had from across the globe, everything is in negative terrain. So the Dow is down 250 points overnight. The US 10-year yield almost, near that 16-year high. Risk aversion is back, so gold has been rising for 3 straight days now. Brent is back at $93 a barrel, and the Fed chair coming out and saying that inflation is too high at a time when Brent has been moving further, right, because of all the escalation of the Gaza crisis. So in that context, it's just better to sort of take a step back, be a little bit on the sidelines as we watch this, the market move today. It's not a buy on dips market, so, better to be a bit cautious. Also, you've had these FMCG companies come out with their numbers where the revenues are largely below what the street was estimating. So no great positive trigger from there either. Let's see, the important bit is whether we can arrest the fall at that 100-point knockdown or whether it gets worse from there.
Well, that's right, Sonia. That's going to be the big question, right? My sense is that maybe the dip gets bought into, but you can't carry those positions. We're getting into the weekend, and the global cues as well are on a bit of a tizzy. Brent crude prices are around $93 per barrel. The US yields as well, nearly at around 5%. Hawkish commentary coming in from the Fed. And also the commentary coming in on the Israel conflict. I'm looking at various international agencies as well. And the commentary is not comforting at all, for the good of humanity, for the good of the economy, for the good of everyone. We just want that conflict to come to an end. And hopefully, all the minds that are working on this, they come to some kind of conclusion. And we do see this, this entire thing end very, very soon. Getting back to the markets, well, the Nifty is in that range, 350-point range. And going by the GIFT Nifty opening, we're likely to start closer to around the lower end. So the dips, they're getting bought into, but the bounces are also getting sold into. Just take a look at yesterday. We started off lower. So if you bought the dip, you'll be very, very happy. But from the highs, we did come off as well. And the Nifty ended 57 points off the high, but the last tick was nearly around 75 points off the high. So that's because of averaging that we did see a bit of a recovery. The Nifty Bank, you would have thought, well, it started off in the red. We're off to the races with that big bounce that we got of more than 400 points. But we ended close to 300 points odd. Short point is buy the dip, but make sure to square off your position, because carrying positions is not really helping. It's a proper trader's market. The FIs, well, they're net short on the index. They've closed on 71% of their positions on the short side. And I just want to bring up 2 strikes for you. The 19,500 put and the 19,800 call. And these are the goalposts. Both of them, the total open interest is at around 73 lakh odd. And the premiums come up for you on the screen as well. So just plugging in the numbers, the support level is 19,500. Yesterday's low was 19,512. If you're an adventurous trader, maybe you look to buy the dip, keep a 50-point stop loss odd. But if you get that bounce, it would be prudent to book out with some profits as well, as was seen yesterday. On the upside, 20 and 50 DMA, that makes a bit of a resistance zone. The Nifty Bank is pat in the middle of the 20 and the 200 DMA. The sense you get is maybe, in fact, it wants to go down to visit the 200 DMA odd, but you'll need some bit of a positive trigger to see the Nifty Bank bounce up from here. GIFT Nifty, like we saw yesterday, suggesting a pullback closer to around that crucial support of 19,500. If you're buying the dip, make sure you square off the position on the bounce, and stop loss, very, very crucial.
Absolutely. And, we are also heading into not a long weekend, but there's a holiday on Tuesday as well, right? So in that context, people may take Monday off and take that entire long weekend and may not want to keep their positions open because of the escalating crisis in West Asia. And that's another thing perhaps to keep on your radar.
Just one thing with regard to the broader markets, there were some signs of frothiness. And small caps and mid caps, they do well when interest rates are lower and when crude oil prices are lower as well. Now, interest rates are not showing signs of cooling off, and Brent crude prices is elevated. So I'll want to track that space because there have been many, many winners out there. But particularly these manufacturing-oriented companies, we'll have to keep an eye out on them.
The other thing, guys, is that if you look at what's coming through from the US in terms of earnings, right? Last quarter was blockbuster. This quarter is very mixed. So today, I think we'll get the Amazon numbers, which will give you a sense of what the consumer in the US is doing. But so far, what we've got is Netflix, Tesla. It's actually very, very mixed. So that's the other one, which has got influence on what the US market itself does.
Absolutely. And even in our own markets, right, earnings have been far from impressive. Perhaps just the banking space showing, some lease of life. Otherwise, most sectors have been muted this time, up until now. But let's kickstart the show and tell you what you'll get to see in the next 2.5 hours. First up, we have a view coming in from Amit Sachdeva of HSBC, who says that the FII outflows linked to the US bond yields rise has largely played out, leaving the geopolitical situation as the key unknown that may potentially weigh on the market and trigger risk aversion. He says if the current situation is largely contained, he thinks this makes the case for an imminent rebound in FII flows, given that growth continues to stand out and mid and small cap rallies have left the large cap space to outperform, supported by attractive valuations.
Okay, this is from Lawrence Belanco of CLSA, who is, of course, a chartist, who says that there are 3 key features to be aware of the daily chart of the Nifty. He says the first is June's breakout from the trading range that lasted from October 2021 to June 2023. He adds the second feature is the price momentum divergence seen between the July and September highs. He says the final feature to note is the 2 support levels of 19,200 and 19,230, and then 18,520 to 19,017. In conclusion, some patience is warranted as the market works its way through a corrective phase of its price momentum breaks registered in September.
All right, let's also get you some money market views. The rupee has been weakening quite a bit over the last many days, and Lakshmanan V of Federal Bank says the rupee traded in an ultra-thin range this week, with volatility at a multi-year low despite uncertainties in West Asia, coupled with a rising US 10-year yield, which is trading at a 16-year high. He expects the rupee to trade in a range of 83 to 83.48 for the next few trading sessions.
All right, on the bonds, Lakshmanan V says that tracking the spike in global yields, the domestic market reacted in line. He adds the move of the US yields above the psychological level of 5% will have similar impact in the domestic market. He's expecting the 10-year benchmark bond yield to trade between 7.3 to 7.43%.
Well, a lot of stock-specific action for you, and we'll get to that in just a bit in greater detail. For the time being, we'll run you through our top 10 list. We'll look at HUL, ITC, Metro Brands, Jindal Stainless. They are stocks that could react positively. While on the flip side, United Breweries, Emphasis, Tata Communications, Zomato, Havells, Voltas, all of them could be reacting to negative news flow overnight.